Hi all, welcome to i-tutor Academy. In today we will discuss MMPC 010, Unit 1, Subsection 4. In last video we started Unit 1 and MMPC 010 also. That is Managerial Economics. Okay, so this subsection is all about appropriate definition. So according to MC Nair and Merriam, managerial economics is use of economic mode of thought to analyze business situations. According to Professor Ivan J. Douglas, managerial economics is concerned with the application of economic principles and methodologies to the decision making process within the firm or organization under the condition of uncertainty, and Spencer and Siegelman define it as the integration of economic theory with the business practices for purpose of facilitating decision making and forward planning by management. And according to Hailstones and Rothwell, managerial economics is the application of economic theory and analysis to practice of business firms and other institutions. And a common thread runs through all these descriptions of managerial economics, which is using a framework of analysis to arrive at informed decisions to maximize the firm's objectives, often in an environment of uncertainty. And it is important to recognize that decisions taken while employing a framework of analysis are likely to be more successful than decisions and that are knee jerk or gut feel decisions. Okay. And next section is managerial economics and other disciplines. So managerial economics is linked with the various other fields of study like microeconomic theory, macroeconomic theory, and operation research, theory of decision making, statistics, and management theory, and accounting. So these are the other disciplines related with the managerial economics. So all of you know what is microeconomics. I stated in the introduction, the roots of managerial economics spring from macroeconomic theory, and that is price theory, demand concept, theories of market structure are few elements of microeconomic used by managerial economists. It has an applied bias as it applies economic theories in order to solve real world problem of enterprises. And the macroeconomic theory, this field has little relevance for managerial economic, but at least one part of it is incorporated in managerial economic and national income forecasting. The latter could be an important aid to business condition analysis, and which in turn could be a valuable input for forecasting and the demand for specific product groups and operation research. This field is used in managerial economics to find out the best of all possibilities, and linear programming is a great aid in decision making in business and industry, as it can help in solving problems like determination of facilities, on machine scheduling, distribution of commodities, and optimum product mix, etc. And theory of decision theory has been developed to deal with the problem of choice or decision making under uncertainty, where the accept applicability of figures required for the utility and calculus are not available. And economic theory is based on assumption of a single goal, whereas decision theory breaks new ground by recognizing multiplicity of goals and persuasiveness of uncertainty in a real world of management. And statistics helps in empirical testing of theory. With its help, better decision relating to demand and cost function, production, sales, or distribution are taken, and managerial economics is heavily dependent on statistical methods. And management theory and accounting, maximization of profit has been regarded as a central concept in the theory of the firm in microeconomics. In recent years, organization theorists have talked about statistics instead of maximizing as an objective of the enterprise. Accounting data and statement constitute the language of business, and in fact the link is so close that managerial accounting has developed a separate and specialized field in itself. Okay. And next is economic analysis. Okay. In economic activity is the constant effort to match ends to means because of scarcity of resource. The optimal economic activity is to maximize the attainment of ends and the means and their scarcities, or to minimize the use of resource given the end and their priorities. And decision making by management is truly Economic in nature because it involves choice among a set of alternatives, causes of action. The optimal decision making is an act of optimal economic choice considering objectives and constraints. This justifies an evaluation of managerial decisions through concept, percepts, tools and techniques of economic analysis of the following types: micro and macro analysis. In microanalysis, the problem of choice is focused on single individual entities like a consumer, producer, a market, etc. And macroanalysis deals with the problem in totality like a national income, general price level, etc. And partial and general equilibrium analysis. To attain the states of stable equilibrium, the economic problem may be analyzed part by part and one at a time, assuming other things remaining the same. And this is partial equilibrium analysis. Next is statistic, comparative, static, and dynamic analysis. This is reference to time dimension. A problem may be analyzed allowing no change at a point of time, that is static, and allowing once for all change at a point of time, that is comparative static, and allowing successive change over a period of time, that is dynamic. And positive and normative analysis. In positive economic analysis, the problem is analyzed in objective terms based on principles and theories. In normative economic analysis, the problem is analyzed based on value judgment. In simple terms, positive analysis is what it is and normative analysis is what it should be. For example, CEOs in private enterprises earn 15 times as much as the lowest paid employee is a positive statement. A description of what is a normative statement would be that CEOs should be paid 4 to 5 times the lowest paid employees. Okay, and activities is here. Based on that, you can refer from your IGNOU study material. And next subsection is basic characteristics, that is decision making. And case study of an American multinational retail company is based on decision making is here. And managerial economics serves as a link between traditional economics, and managerial economics is served as a link between traditional economics and the decision making science and for business decision making. And the best way to get acquainted with managerial economics and decision making is to come face to face with the real world decision problem. So here is a case study. You just refer it from your study material. And the basic characteristics of managerial economics can now be enumerated. That is, it is concerned with the decision making of an economic nature. It is microeconomic in a character. It largely uses that body of economic concept and principles which is known as theory of the fame, and it is goal oriented and perspective. And managerial economic is both conceptual and metrical. It includes theory with the measurement. Okay, so this is managerial economics. One is decision problem, one is decision science, tool, technique of analysis, optimal solution to business problem, and traditional economics. And next figure is basic characteristics. So management decision problem is decision science, mathematical economics, and here is economic theory, also microeconomic theories, macroeconomic theories. Then it is managerial economic application of economic theory and optimal solution to managerial decision problems. Okay, so this is basic characteristics of managerial economics. And in this video you just parallelly use your IGNOU study material also, so the chapter will be more clear. And so summary of this chapter is managerial economics is used by fame to improve their profitability, and it is the economic applied to problem of choice and allocation of scarcity and resources by the fame, and it refers to the application of economic theory and the tools of analysis of decision science to examine how an organization can achieve its objective most efficiently. And managerial decisions are evaluated through concept, tools, and techniques of economic analysis of various types. It is linked with the various field of study. And self-assessment questions, around 8 questions are here. It is very important like your assignments, and you just do it. It will help you for your time and examination. In between any doubts, you can contact us anytime. And this is all about unit 1, and please refer last video also. And for more MBA series, you just do like, share, and subscribe our channel. Thank you so much.
i-tutor Academy presents IGNOU MBA Complete Syllabus Coverage Classes for individual students, semester-wise subject with online flexible timing. For more details, contact on +91 623 827 1885.